Stock Play of the Day is an educational program. Any statements made by Ally Invest employees are not intended to be or should be considered investment advice, a recommendation to buy, sell, or hold a security, or a recommendation to adopt an investment strategy.
Hello and welcome to the Stock Play of the Day. Today's stock is Moderna. We'll discuss, should we pass or should we play? Hello, my name is Brian Overby. I'm the Senior Options Analyst at Ally Invest.
And I'm Callie Cox, Senior Investment Strategist at Ally Invest.
All right, Callie. Well, let's start by showing the chart of the S&P 500 index. We did break down below the 20-day moving average, and it looks like we got a little bit of support from the 50-day moving average. We did a small little bounce last week on Friday. So right now we are trading between the 50 and 20-day. Obviously, we would like the 50-day to hold as far as the markets are concerned. But besides that, in the S&P 500 index, there's not too much interesting going on. What do you see as far as the news and headlines going into this week in the markets?
Yeah, Brian. Well, I beg to disagree. I feel like, wow, we're seeing some action. We're seeing some headlines. I have a lot to talk about. So I'll recap quickly what you just talked about. The S&P yesterday fell as much as 2.1% during the day, which is a pretty big move. And then, like Brian mentioned, effectively bounced off the 50-day moving average. There's a lot of excitement. It was an unusually jolting day because we just haven't seen much of anything in the market these days. And now today, look at the S&P 500, it's up about 1.6%. And we've effectively erased yesterday's decline from close to close. So what the heck is going on? What's all this action? What's all this news? Well, markets are getting caught up in the concerns around the Delta variant of COVID and what a rise in cases could mean for the economy. Yesterday's sell-off was a jolt to us, but there has been some movement underneath the surface for a few weeks now, so it wasn't exactly a surprise. That movement, well, investors have steadily rotated out of reopening stocks and into growth stocks, like think tech, stay-at-home stocks, just because of worries around the growth outlook and where do we go from here? It's been a deep contrast to what we've seen for most of the year, Brian, which is, the rotation into value stocks in anticipation of that post-COVID blowout in growth. Now it seems like that blowout in growth is past us. We just capped a pretty epic second quarter, and investors are wondering what's next. And coinciding with the rise in Delta makes everybody think that there could be a slowdown in growth. By the way, we look at it and it looks like growth in the second half of this year could still be healthy and above average. But I think investors are having trouble reconciling the fact that growth is going to slow and that growth could still be well above average or healthy enough to sustain this market. It's really tough to process. It's understandable. And that's why we're seeing the risk pendulum swing back and forth. There's just a lot of uncertainty out there. And there always is, for sure. But it seems a little more uncertain than usual. We're seeing that reflected in plenty of different assets there. And that rotation has left markets a little bit especially exposed to a pullback like we saw yesterday. So put it all together, Brian, we're not quite out of the woods. Stocks may be rebounding today. The market may look healthy. But there's still a lot of palpable anxiety out there, and the rotation is still happening. And last I checked, I just looked over, but last I checked, yields are unchanged to down today. And yields are another piece of anxiety in investors' minds. The 10-year yield has declined to around 1.1%, and that's made a lot of people nervous. Why? Because the bond market usually sniffs out trouble. That's been its historical reputation. This isn't always the case, and it's been a little more noise than signal recently, especially with the Fed so involved in markets. But it's still something that a lot of people are watching, and a lot of investors are scratching their heads about, and they're going to react off of that. So right now we're trying to, keep ourselves based and grounded in the fundamentals. We're watching earnings reports. Earnings are rolling in. And as Brian mentioned, if you want to look from a more technical perspective, that S&P 50-day moving average has been a concrete floor for the market. So we're, kind of watching the market bounce around. I think if it breaks the 50-day, I'm going to get a lot more worried, but it seems like that line is holding pretty steady. And, that's kind of the level that we're watching from here. From a very basic technician's perspective because I'm not the chart guru here. But Brian, that's my spiel about the markets today. Tell us what you're seeing in the VIX.
All right, so I have my VIX watch list up. And let's just note that, okay, we bumped up above the 20% level. That seems to be the magic number. I think if you were going to say, well, where is the marketplace concerned or not concerned, it would be right around that 20% level, because that level was established after the pandemic. Took us forever to break below it. Yesterday, we broke above it. Now we're trading right now in the VIX index. I'm going to scroll down to the bottom of my watch list. It's trading at 1985, right at that level. Now I'm going to scroll up to the top of my watch list. We got the August future at 21, almost 22. We look out to October, we're at 23. September, we're at 23-ish. So we still have a little bit of volatility, a little bit of uncertainty in the marketplace in the near term. The VIX was hanging out down around that 15% level. And I guess that was the first time since the pandemic where I would say we were in the normal VIX range if you look at a 5-year average in general on the VIX index. So with that said, there's a little bit of nervousness in the marketplace, probably because of a lot of those things that Callie has mentioned. Now, last week, as we had the big down day, when you saw that big red candle in the S&P 500 index, the actual index that did fairly well there, I should say the sector index, the XLV, which is an iShares sector index that tracks healthcare, was actually green on Friday. So the whole marketplace was kind of struggling, trying to just either break even to down over the entire day. But we had the healthcare sector do fairly well. So guess what we're going to talk about? The one stock that was probably propping it all up, Moderna. And to look at this chart, it's a little bit scary. So before I pass it to Callie to talk a little bit about the healthcare sector in general, if we look at Moderna, we're almost doubled from the 200-day moving average. To say we're overextended, well, yeah, without a doubt, it's basically gone parabolic here. But with that said, Moderna overall isn't, on a valuation basis, isn't doing as bad as a lot of the other stay-at-home stocks. They're trading at much higher valuations. I'll let Callie talk a little bit about that today. So for the stock play of the day, we're going to actually look at a couple of different trades in Moderna, mainly because of the way the chart looks. So with that said, I'll pass it back to Callie, talk a little bit about the fundamentals and the background on Moderna.
All right, Brian, let's talk Moderna. So before I start, I have to tell you all a story. Yesterday, Brian and I were poking around, looking at some stocks, thinking, what are we going to talk about on stock play of the day? And Brian pulled up the chart of Moderna and we were like, whoa, we have to talk about this. Look at that. So Moderna stock, if you haven't noticed, has been a pleasant, and that's understating, but pleasant surprise in an otherwise, fairly stalled market. Moderna shares have risen 40% over the past week. And you can see that on the chart, parabolic, like Brian said. It's been the best performing stock in the NASDAQ 100, and I guess it'd be one of the top performing stocks in the healthcare sector as well. So what's going on? Why is Moderna going parabolic? Well, it has 3 big storylines going for it. Number one is the storyline you probably know the most about. Moderna obviously is one of the few COVID vaccine manufacturers out there right now, and it's manufacturing vaccines for countries all around the world, including the US. In fact, a few days ago, it actually just signed a deal to deliver 50 million doses to the Japanese government early next year. So it has the COVID vaccine storyline going for it. Obviously, unfortunately, COVID isn't quite behind us yet, especially with the worries around the Delta variant. Moderna is also slated to join the S&P 500 tomorrow, which is a big step for any company. Kind of like a stamp of approval, joining one of the world's most exclusive index clubs. We could be seeing people front run that. We tend to see that with bigger, higher profile stocks joining the S&P 500. And the reason why they front run is because, whenever a stock joins the S&P 500, a bunch of portfolio managers and funds have to buy the stock if they're tracking the S&P 500. So that's another piece of the storyline. And if that's not enough, Moderna is a healthcare stock. And what do I mean by that? So Moderna is a healthcare stock, and healthcare has held up really well in this particular bout of market volatility. Why? Because it's more of a defensive sector and it has decent dividend yields. With bond yields declining, investors are looking for that bond proxy. One place you can look at is, surprise, dividend stocks with higher dividend yields. So it's got a lot of good bullish catalysts going for it. And obviously the stock is reflecting that. But the big question out there is, how long can this rally last? And here comes the risk. So Moderna shares have run far in a short period of time. There's no doubt about that. And I mentioned a little bit earlier that they're joining the S&P 500 officially tomorrow. So there's a small sell the news risk tomorrow if these gains are indeed investors front running the S&P 500 inclusion. And I'll point out the Moderna earnings, say that 5 times fast. Moderna reports second quarter earnings on August 5th, and the shares could be pretty volatile around that, especially considering what they're pricing in right now. Brian mentioned that valuations are still, pretty moderate, pretty digestible, but it's really hard to tell with a company that only has one prominent revenue stream and lots of speculation in it. Of course, Moderna is, again, one of a few COVID vaccine manufacturers, and that seems to be a really good story. There's a lot of demand for the vaccine, maybe not in the US, but globally for sure, especially with the variant spreading. But it's tough to say just how much is priced into this stock. And I'll point out too, I told Brian this before the call, but a big risk that I see is that Moderna is also a company with a concentrated revenue stream. They have one viable product right now. And that inherently builds in some risk, no matter how strong that revenue stream is, especially around earnings. I mean, if you have management coming out and talking about that one revenue stream and they say one thing wrong or give one confusing detail, that could hit the stock pretty quickly, especially as investors digest the fact that, there isn't a lot of diversification in the business lines. So I've talked a lot. Sum it all up, Brian. I want to trade to ride this rally in Moderna. Let's see a bullish short-term trade, but I want to see some protection for downside risk in case earnings or, just the market's ups and downs trip us up. So I want to hear what you have for us. But before I pass it along, as always, I'm going to remind our viewers to drop questions in the chat, because Brian and I will be answering your questions live at the end of the show. And we love that part. It's our favorite part of the day. So give us something to work with. Drop some questions in the chat. All right, Brian, I'm going to pass it over to you. What are you seeing in the options?
All right. Well, then let's start by looking at the quote in Moderna. Now, we were hoping, we talked to, like we said yesterday, there's a little bit of a momentum. It's hard to just jump into a stock that's made such a big, powerful move over the last 3 or 4 days. And even since the open, we're up about 18 points or about 5%. So if you want to ride the wave, you're a little worried that we might be doing the buy the rumor, sell the news, or buy the event, and then on the day of the event, get out of it. Doesn't come off, doesn't quite sound as good when you say it that way. But when it gets put in the S&P 500 index, where do we think it's going to go? Will it continue on this move, or will we get a little bit of a sell-off? As Callie had mentioned, you're going to have a lot of investors that are going to have to come on in and buy a little bit of Moderna to be enabled to make sure that they're tracking the S&P 500 index enough inside their portfolios. So with that said, I'm going to do something where I can manage risk. I'm going to give you 2 trades today. I'm going to take a look in that. Okay, let's do something short term. Let's do something before their earnings. And that would be a long call spread. Why a long call spread? Well, I can manage my risk on a long call spread. I can choose what my risk reward is. I can set up my profile. So I'm going to risk less than I could potentially make. We're going to do something. We're going to probably do about a 5-point wide spread. We're looking to pay right around $2. That means that will be our total risk of the trade. And then we're going to give ourselves about $3 worth of upside. Now, that's how I want to manage that risk. And there's a couple of ways that you can look at it. Obviously, the stock is moving. So if you go a little bit further out of the money, well, then you can actually maybe, instead of paying $2 for it, you can pay $1.50 and get $3.50 worth of upside. The stock is moving overall. So obviously an 18-point swing today, a bigger swing yesterday overall. So I'll just give you the trade and I'll let you decide that strikes. Okay. So if we go on in, let's go back to the Ally Invest option chains, which should be right here. And we're going to go very short term. We're just going to do the 3-day event. We're going to go to this Friday. And we're going to go a little bit out of the money. Right now, we got Moderna traded at 33.76. So in this, or I'm sorry, at 37, okay, 30, 330.25. All right, let's pick that number. That's a problem when you're dealing with live markets, but that's always makes the stock play of the day fun. We're going to buy the 335 strike call, and we're going to sell the 340 strike call. All right. 3 days remaining to that expiration date. Okay, now we're looking at $1.90. So that accomplishes our goal. We're giving ourselves a little over $3 worth of upside, and we're going to have about $2 or a little less than $2 worth of downside. This is going to be the official paper trade. It's obviously not meant to be a recommendation because this is a very speculative trade on a stock that's moving. But one thing that we're always trying to do here on the stock play of the day is, if I want to participate in Moderna, how would I do it considering the way the chart looks and what's going on in the marketplace? And it's more about learning option strategies that are inside the options playbook that might apply to the current market conditions overall. So I'm putting it in the right rail. That officially makes it the paper trade for today. And here's the way the trade reads. We're buying to open one of the July 23rd expiration, 335 strike call options. At the same time, selling one of that same expiration, 340 strike call option. We're looking to pay, let's call it 195. Okay, that's not a bad number right there. It was a little less when we first brought it up, but we'll call it 195. Never a guarantee of a midpoint fill. And obviously you got to add in commissions, but that means that for every 1-by-1 spread that we do, we're going to risk $195 plus commission. 5 points wide is the width of the spread. That's the maximum that it can trade for. And we're going to know in the short term, right? We're just looking for this to continue, might be out of it by the end of the day. Very possible if we can get that move up to that 340 level or somewhere close to that. If I could double my money, I would definitely think about getting out. In other words, if I paid $2 for it and I could sell it for $4, I don't think I would stick around for that extra dollar. I would just get out of the trade. That's the way I would approach it. On the downside, I'm just going to let it ride. We're managing our risk by doing the spread. So I'm doing this trade thinking that I could lose this $2. And if you don't have that approach to it, then you probably shouldn't be doing the trade overall. That's the way that I would be looking at this. For every 1-by-1 spread, $195 plus commission. On the upside, we're going to make $305 if we can get to that $340 by that expiration date overall. All right. So that is the speculative type trade. Now, if you think, oh man, I missed it. What was I thinking? I should have bought Moderna before it got put into the S&P 500 index. If it comes down, I wouldn't mind buying more. Well, at this point in time, we got some volatility. Obviously, you see the chart. Look at the implied volatility of these option contracts that we're trading right now. I'm highlighting it inside the option train. The at-the-money option contract with 3 days remaining is trading at a 98% implied volatility. So if I scroll down and I think about maybe selling something to try to buy some stock, I might go out a couple of weeks in time and go down to, let me see what expiration I have here. The August 6th expiration. Now, the nervousness here is that you're looking at doing this around earnings. So August 5th is when the earnings would be. I would be selling some of that premium, saying that if it did come down after earnings, that I would be willing to buy maybe 100 shares of Moderna at the strike price that we're selling. So the ones that I have highlighted here, 300, I kind of like round numbers overall when you're looking at this. What else can you look at on the chart? It's just gone parabolic. There's really no rhyme or reason. There's no charting pattern that you can really use except for the fact that it's definitely overextended. Everything's going to show you that. And we would be selling the 305 strike put, buying the 300 strike put. Short put spread, it's that simple inside the options playbook. But I'm doing this saying that I really want to buy the stock if it comes down to 305. Means I got to have $30,500 in my account willing to buy 100 shares of that. Now I'm going to manage my risk because there's just too much risk here. But I can bring in, by doing this trade, I'm going to sell that put and buy something a little bit lower. And I'm going to bring in a net credit of $2.43 if I can fill somewhere to the midpoint, right? So I have $2.50 worth of risk on this overall trade. And I'm basically targeting a price, what are we, 30 points lower, 305 approximately. Well, it's really moving around 25 points lower, saying if it comes down, I'm willing to buy a little more. So I'm going to take advantage of this increase in implied volatility, but I'm going to also manage my risk by buying some protection below that 300 level. So 2 ways to approach it. Very speculative long call spread. If you would like, if you're really thinking about buying it, I'd sell some of this vol premium that's in it. This would be one way that I would approach it. And you could even combine the two if you really wanted to, because you're selling that put spread, bringing in a little bit of a credit, and you can use that credit to buy that long call spread if you wanted to. That's a very speculative way to look at it. But I've seen it done quite often from more advanced type option traders. Okay. So that was a lot. Gave you an extra strategy today. The official paper trade, by the way, will be that long call spread. And that's what we'll talk about on Friday in the stock play of the day overtime. So get your questions in the chat box. I'm looking over here right now. Callie, I don't really see too much going on. Does anybody have any questions? Must have did a great job of explaining this trade today.
Yeah, well, we have a greetings, everyone, from William Craig. So greetings, William. Thanks for joining us today. Quite a fun episode, and you got a bonus paper trade, so pretty good deal. Let's see. I don't see any questions, but you know what? I will jump the line and ask you a question of my own, Brian.
All right, bring it.
All right. So let's say Moderna, we'll play the what if game. Let's say Moderna keeps rallying, just keeps on this face-ripping rally path, for another week or so. How, and again, metaphorically or hypothetically, how would you adjust this trade? Because we've talked about the downside scenario, but there's also an upside risk as well.
Right. So you could adjust this a little bit more. If you really thought that there was potential for it to do a couple more leaps, I would actually just move a little bit further out of the money on our long call spread. I mean, that would be a viable alternative. And I kind of thought about that anyways, because we have that type of risk. I don't mind. I'm paying 2 for the potential to make 3. That was kind of my goal. But if I even move up another 5 points, because obviously 5 points in this stock isn't to the downside or upside, just isn't a very big move. We're up 13 points already today, 5%. I think it's actually down 5. We were up 8% at one point in time before we started the call. So the stock is moving quite a bit already. So if I look at it, I mean, I could go a little bit more out of the money. So if I go to the 350, and I'm just going to highlight my chains here, I'm going to stay in that same short-term expiration, mainly because of where vols are at. I guess I could talk a little bit about that. But I buy the 350, sell the 355. Now I'm paying $1 trying to make 4. Let me scroll up a little bit. So that's how I would manage my risk. If I really thought about leaps and bounds, I would manage my risk that way by going a little bit further out of the money. Now we're doing the shorter term expiration. If I went a little further out of the money, I might go out another week, give it a little bit more of a chance to actually get there. But one thing about long call spreads is that if you're doing them, they max out closer to the expiration date. And I'll just use this one as an example. And here's where we're at. Okay, so based off of the trade I just tossed in there, if we put in this trade right now with 3 days remaining at expiration, this is where the underlying stock is at. Here's the profit and loss graph at expiration on this trade. Maybe I can even zoom in a little bit. That's a little bit better picture. But because there's so much vol premium as of today, if that stock ran up to 355, we would have a profit, but not as much as if it was at expiration. So one of the reasons why we pick a shorter term expiration is that eventually this line is going to morph into the dotted line. Let's take it and let's go down to 0. That's really 1 day remaining to expiration. And you see all of a sudden the colored line, or the as of today line, starts looking more and more like the dotted line overall. So that's why I picked the short term, because if I want to be right, I want to get paid. And you need, when you're dealing with 100% implied volatility, you need time decay to happen in order for that trade to max out, or you need implied volatilities to come down a little bit. But in our instance, we're going to take it, we're going to fight that battle with time decay by doing only a 3-day option contract. All right, so now we got a couple of questions in there, Callie. I guess I'll pass it back to you. I'll let you ask the questions that we have in the chat box.
Yeah, definitely. Okay, so we have a question from Tom Russell and an observation actually from Patricia Browsey. I'm sorry if I mispronounced your name. So Patricia says, Moderna is heading down on the 5-minute chart, and I just checked. It's true. Maybe we're topping out today. I don't really know. This has been a rather unpredictable stocks. So we'll have to see what happens. So Tom Russell has a question, Brian. Tom Russell says, short the Moderna 195 covered call expiry on August 27th. Keep rolling out the premium, and it's now at 151.7. What would you do? Is that enough detail for you?
Yeah. Well, I mean, I don't want to be coy about it overall, but Tom, you just basically that car drove off the cliff, and now you're asking, how do we repair it? It's totaled overall. So what I would look to do is probably just close out the trade and put on a new position overall. You're just too far, too deep in the money, and well, it looks like 8/27 is that expiration. So we got another month. So you're looking at going through earnings and everything else. I would probably either buy the call back, but you're going to have a little bit of risk, or I would let it ride for the next few days. As mentioned a couple of times already, when we started the call, we were up 8%. Now we're only up 5% on it. Stock's going to be volatile, so it's going to give you a little bit of a hedge. Let it ride through the rest of the week, see where you're at. But I don't think you can just keep rolling it. You're going to keep having losses on that call option. You need to restart the position, like almost like a computer. You just want to turn it off and turn it back on. It's really hard to come at that when you got an option contract trading at 151 and you really didn't have time to roll it. So it's not really your fault. It just blew through the strikes. If you look inside the options playbook, and I'll highlight that right now, I do have a managing your position, rolling a covered call. And in here, we always highlight that you want to be within a point or two of the strike price when you make the roll. And you just didn't have the time. That means you would have just rolled constantly, nonstop, and gone out further and up in strike because it just moves so fast. I mean, how often do stocks make that type of move? But this is how I would manage a position on a normal covered call scenario. And Moderna is a tough one. So just in general, let's just talk about covered calls. We got a little bit of time here. So we got a few minutes. So just in general, Moderna isn't one that I would really like to do covered calls on overall. And it's mainly because I want some volatility with some predictability. And Moderna, because of the things that Callie mentioned, doesn't really have a lot of predictability. If they come out with a new drug, it's going to go through the roof. And if I sell a covered call on it, I'm going to have all the downside of owning the stock, but not all the upside of Moderna coming out with a new drug with a phase 3 trial that did well. And Moderna is that company. They have a lot of different stocks a lot of different pharmaceuticals that are in the pipeline that can, change the world like they did with their vaccine overall. So this isn't a stock that I'd really like to do covered calls on. Just flat out, that's simple. I want to do a covered call on a Walmart. I want to do a covered call on something where I have some volatility, some predictability overall. Even Apple isn't a bad stock. I mean, we get a little bit of volatility, but it's a little bit more predictable on the stock prices. Moderna comes out, has a bad phase 3 trial, the stock goes down, has a good phase 3 trial, it goes to the moon. So that's not the stock that I want to be in the covered call on overall.
Yeah, good explanation. Good explanation. Yeah, and best of luck with that, Tom. We're rooting for you on our end. We might need to wrap this up, Brian. It looks like it's 12:58, and I know we have a one event we have to get to. So I'll go ahead and take us out. Don't forget, everybody, Brian will close the loop on this trade at Stock Play of the Day Overtime, 12 p.m. Eastern on Friday, as he does every week. So definitely check that out. See how he did. Could be interesting. All right, Brian.
Everyone, so click subscribe, ring the bell, make sure you get all the alerts, and we'll see you this Friday for the Stock Play of the Day Overtime. Thanks for coming, everyone.